Welcome to Place and Experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy Place and Experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on.
Well, there you have it, and we are live. Welcome, one and all, back to your Next.io weekly news, where we bring you the biggest headlines in the iGaming sector, whether you want them or not. I am joined, as always, by the inimitable Mr. Nico Jansen, CEO at Bet It West. Nico, how the devil are you?
I'm pretty good. Survive Oktoberfest, which is always great. I didn't catch, a heavy flu. Of course, everybody needs to have, a little bit of a gift. That's why everybody is joining the flu club after the Oktoberfest. But I'm good. Had a decent week. Looking forward to discuss the latest and greatest once again with you, my dear friend, and of course with the audience as well. But first things first, how are you, mate?
I'm very well, thank you, Nico. I'm glad to hear you had a good Oktoberfest. Next year, I'll come and stay with you. I'm sure you got a spare mattress for me. I can crash on your floor or something, and we'll go and drink some beer and get some lederhosen made and all the rest of it. That'll be lovely, but we're about the only two people, I think, in the industry who are not currently in Vegas for G2E. We should shout out all of our friends and colleagues over there in Nevada. But we don't need the glitz and glamour of Las Vegas, Nico. We have all the glamour and excitement and dazzling spectacles that we need right here on Weekly News, and this week is going to be a very special episode. We've got a bit of an exclusive scoop coming up for you, which is all about Playtech, who have launched legal proceedings against Games Global and their on-air entertainment subsidiary. We'll be coming to that in a few minutes. We've also got a bit of a shareholder revolt against Playtech, which is planning to dish out 100 million euros in bonuses to its senior management following the acquisition of Snaitech. And even more than that, Nico, we're going to be bringing our audience the latest from the United Arab Emirates, which, of course, is a very exciting market. But before we get into all of that excitement, I think we've got to do what we always do, Nico, which is to give people the quick-fire rundown of the biggest stories of the week. It is, of course, the one and only 10 in 5. Nico, nobody does it quite like you. Why don't you take it away?
Thank you. So, French gambling warns of planned 1.6 billion tax rate. The new government's tax hikes set to increase burden on most heavily taxed sector in Europe, says casino trade body, with online operators marketing spend also to be targeted. Quite interesting. And guess what? Usually, if taxes are raised, customers tend to diminish into the black market. Fingers crossed it will all work out in the French way, as we're happy to see France to succeed. Heading over to the UK, as gambling in the UK, COVID-19 cost the sector, guess what? £1 billion in economic output, which a new study says. The UK's government's Department of Culture, Media and Sport has estimated that the COVID-19 pandemic cost the country's gambling sector £1 billion in lost economic output. The revised estimate is based on updated data tracking the sector's activity from 2011 to 2021. But I'm pretty sure it's not just the gaming sector which has suffered from COVID-19. Gambling in Spain, as the revenue is up in Q2, the Spanish gambling regulator, the DGOG, has reported that gambling revenue in the country hit 346.34 million in Q2. That's a rise of 10.8% year on year, but it is a decline of 25% from Q1. This is generated by 78 licensed operators, 50 of them are offering casino, 42 offering betting, and 9 offering poker, plus 4 bingo operators and 2 providers of contests. Heading over to Brazil as Lula demands the Bolsa Familia protections prior to bet's launch. The launch of Brazil's forthcoming betting market must be safeguarded by a federal policy on gambling addiction to eliminate social harms such as public debt. This demand was issued by President Inácio Lula da Silva during ongoing meetings with senior ministers regarding the vulnerabilities of the betting regime. And the president expressed direct concerns over gambling addiction and the social harm caused by citizens accruing debt through gambling activities, which he identified as liabilities that must be addressed by the betting regime. Then DraftKings finally shuts down UK daily fantasy operations. DraftKings has officially ended its daily fantasy sports operations in the UK and completing its withdrawal from the European market. DraftKings has determined that it is in the best interest of the company to discontinue operations in Great Britain, the company said in a community update, adding, moving forward, we will continue to focus on growth and delivering value in other key markets, including US sports betting, the spokesperson added. Then shout out once again to our G2E community, as California betting initiative could be as soon as 2026, but probably in 2028. On Tuesday, James Seaver, chairman of the California Nations Indian Gaming Association, said when it comes to the sports betting, the only sure thing is that whatever comes out of California will be a fresh idea. We have started to think outside the box, Seaver said, and he added, looking at the unique setup of California, we have to come up with a new framework. What's going to come out of California will be new and unique. So shout out and fingers crossed they will finally push things through in California. Staying in the US, also based on news from G2E, as Hard Rock is open to partnering up with DraftKings or FanDuel in, guess what, Florida. Hard Rock International chairman and Seminole Gaming CEO Jim Allen has hinted at the potential for partnerships with commercial sportsbook like FanDuel and DraftKings in Florida. In conversations with CNBC's Contessa Brewer at the Global Gaming Expo in Las Vegas, Allen expressed a willingness to explore collaborations with major brands, despite holding the state's sports betting monopoly. Hard Rock secured its exclusive control of sports betting in Florida through a 30-year gaming compact with the state, which will remain in effect until 2051. So fingers crossed. Usually competition keeps you in condition. So I'm pretty sure things will just be for the better of the customers as soon as, you know, the Hard Rock Seminole tribe is either joined by FanDuel and or DraftKings in Florida. Penn cuts expected interactive losses on ESPN bet improvements. A larger than expected mix of parlays and lower promotional expenses for ESPN bet means an improved interactive EBITDA outlook for Penn Entertainment's third quarter. In numbers, the adjusted EBITDA loss of $95 million at the midpoint of its new guidance, which is a $30 million improvement from the prior midpoint. This resulted in a price increase of Penn stock by 3.5% early Tuesday. Federal Regional Court rules in Brazil lottery licenses cannot operate outside of Rio. The Federal Regional Court of the First Region, short TRF1, in Rio de Janeiro, has suspended the effects of a ruling that allowed brands licensed by the Rio de Janeiro lottery to operate outside of state borders. So the TRF1 president, João Batista Moreira, overturned the effects of a federal district court ruling that allowed those operators with lottery authorization to act outside of Rio de Janeiro. And last but not least, and this also comes from the bottom of our hearts, as Rivalry completes a fresh round of 28 people being laid off. As already done in July, where they laid off 30 members of staff. On Tuesday, this week's Tuesday, Rivalry CEO and co-founder Stephen Salt said on LinkedIn, "We completed a restructure last week, which unfortunately impacted the roles of several talented team members." And then he also, and once again, provided a list of those affected and encouraged potential employers to reach out to those people being laid off. So if you're looking for talents in the US, reach out to the people who have just been laid off by Rivalry, and I'm pretty sure they are focused and driven as the company has been as well. So once again, fingers crossed and shout out to these people being laid off, and hopefully they will find a new home ASAP.
That's right, Nico. Yes, I couldn't have put it better. Rivalry is based in Canada, I believe, in Ontario. But yes, there's lots of talent out there. If anybody is looking to hire in that area in North America, do take a look. You can go to next.io and find that article on our homepage, or you can go to Stephen Salz's LinkedIn page direct, and you'll find the link there. There's a Google sheet with everybody's details. So hopefully everybody there will find, like you say, some new rules very soon. So yes, indeed, shout out to them. Now, I think it's time, Nico, to move on to our major story of the week, which is all about Playtech. It's one of those companies that's no stranger to a bit of media attention. Let's say over the last few years, Playtech's hit the headlines several times. It's been on a bit of a roller coaster ride. So what's happened today? Well, shout out to my colleague, Zach Thomas-Akou, one of the best reporters in the business. He's always digging up exclusive scoops, and this was just another one today. So he revealed that Playtech has launched legal proceedings against Games Global for intellectual property infringement following reports of corporate espionage at its on-air entertainment live casino supplier. So On Air is part of Games Global. It's their live casino segment or subsidiary. Anyway, it's not a brand new claim. It's actually from back in May this year. But Zach dug it up this morning and we just found out, and I think we're the first to report on this. So Playtech filed a Part 7 copyright and design right claim in the UK's High Court against Games Global and other defendants related to the company. So if I can take you back in time a little bit, Nico, to where this story all began, you may remember, I think it was in January this year. And again, shout out to Zach, who exclusively reported this story, thanks to a whistleblower within the business who actually came to him and told him exactly. Oh, I think he may have shared it on LinkedIn. Anyway, there were allegations that a staff member from On Air Entertainment had been spying on Playtech, basically by gaining unauthorized access to internal Playtech materials. So if we can remember, there was a former On Air Entertainment senior product owner called Ivans Ivanovs, And he claimed on LinkedIn that his former colleague, Igor Velix, had retained access to Playtech's internal environment after leaving its EuroLive Technologies subsidiary. So he used to work there, had access to their systems. When he left, he kept access. So after the allegations came out, Playtech said it would investigate On Air for possible IP infringement. And when we contacted On Air Entertainment, they told us that they had engaged an independent investigator to scrutinise the matter, but it did not share the name of the investigator. And then several weeks later, On Air told us again that the investigation had concluded and found that an employee did retain access to Playtech's internal environment, but that the access was not used for spying. So at the time, On Air said, given the nature of the demo environment, no proprietary information beyond externally facing games which are already committed to and completed for release is available. So they were basically arguing this employee had not been able to access anything which wasn't at least nearly publicly available. Anyway, after the investigation, they said the investigation concluded that the individual utilized the system solely for competitor analysis, a standard industry practice within the iGaming sector. In light of these findings, On Air Entertainment is confident that the access was not used for spying, copying, or any infringing activity in any manner. So that was their response at the time. Now, what do we know this morning? Well, to be honest with you, Nico, details are still pretty scant on this case. So we know the case has been filed in the High Court here in the UK. There aren't any publicly available findings at the moment on the docket. So anything that's been submitted has not yet been shared with the public. But we do know that Playtech and its subsidiary EuroLive Technologies, which is the other defendant in the case, is they're both represented by Linklaters, and the defendants are Games Global Limited, Games Global Operations Limited, MT Realtime Live Limited, Realtime SIA, and Igor Velix himself, the man who's accused of maintaining access to Playtech's back end, basically. So they're represented by Cooley LLP, and On Air is represented by Herbert Smith Freehills LLP to defend it. Obviously, Nico, we have reached out to both Playtech and Games Global and On Air Entertainment for comment. And as soon as we get any more on this, we'll be bringing it to you and letting you know straight away. But for the time being, all we know is that the legal proceedings have been launched. And as always, we'll be keeping an eye very closely on this case as it develops. But another shout out to Zach for his investigative reporting. He's always on the lookout for scoops like this. And yeah, as soon as we get a comment back from Playtech and Games Global, we will let you know what they make of it. Nico, I mean, bit of a surprise. I kind of thought this story had been put to bed earlier in the year, but obviously it's an ongoing issue for Playtech. So I don't know. It might just be conjecture at this point, but what do you think of all this?
So first of all, once again, shout out, as you already mentioned, to Zach. It seems like he is always and continuously rattling the bushes, and out of a sudden, something always falls out. So as of now, as you mentioned, we're just trying to get some content out of it. Of course, proceedings have already been filed, and it's now a legal game, probably finally taking to court, which usually lawyers try to avoid. Of course, they are, or as you can say, like shots being fired, but of course you're just trying to avoid going to court, because in court usually both parties lose a decent amount of money. So fingers crossed. And as you already mentioned, as of now, it's just rumors. We have no reliable content and facts out of now. But one thing is for sure: just follow Zach, follow the Next IO news, and as soon as there will be any additional information, be assured, we will just distribute these information during our 10 and 5 or the weekly news wherever it fits. As of now, there's nothing which I can actually add, as there's just rumors going out. So
yeah, well, it's not rumors. We know it's been filed. That's a fact. We know that On Air has already admitted that one of their employees maintained access to Playtech's backend. So, yes, it is a developing story, and we'll bring you the latest as soon as we get it. But that's not all for Playtech this week, Nico, because we've got another Playtech story. Which is the following. Playtech investors or shareholders have criticised a planned €100 million executive bonus package, which was come up with after the sale of Snaitech to Flutter last month. So in September, of course, Flutter bought Snaitech for a whopping £2.3 billion. And after that deal completed, Playtech revealed that its senior management executives were set to receive €100 million in a special bonus payment. So we don't know what each member of the management team was set to receive, but we know that CEO Moore Weiser was going to receive the largest share of that €100 million bonus fund. A separate €34 million bonus scheme was also said to be set aside for Snaitech's executive team. Just to take you back again, Nico, Playtech first acquired Snaitech in 2018 for €846 million. So it's pretty much tripled the value in 6 years, which is pretty impressive. And the business pledged to return between 1.7 and 1.8 billion euros to shareholders as soon as practicable, it said, in a special dividend. So we discussed this briefly on a recent episode, and we said, well, 100 million, that sounds like a lot. But if you've tripled the value of a business, the sales worth nearly 2.5 billion. I mean, maybe that's normal. But today, well, this week, I should say, some shareholders have expressed that they are not particularly happy with the 100 million bonus. They think it's a little excessive. So Jeremy Raper, who's CEO of Raper Capital, issued an open letter last week addressed to the chair of Playtech's remuneration committee. He said, simply put, the plans as structured would constitute the most egregious case of shareholder value expropriation in the history of UK public markets. That's a pretty bold opening gambit, Nico. The plans exemplify crony capitalism at its absolute worst and represents exactly the type of outcome the governance code was created to prevent. So basically, he argued that the deal would represent a large failure for shareholders, and it would basically involve 10 to 15% of Playtech's entire value being surrendered to management. I just want to check that quickly. Playtech's market cap I've got here at about £2.28 billion. So 100 million euros. It's, I think, not quite 10%, but it's certainly a big chunk of Playtech's market cap. So, yes, certain shareholders are not very happy about this. Speaking of which, it's not just Jeremy Raper. We also have Peter Smith from Palm Harbour. Palm Harbour Capital LLP called the package obscene and said it had a lack of transparency, was unconnected to the deal itself and to Playtech's financial results. So Peter Smith, managing partner, said, we therefore do not believe that management deserves life-changing wealth for selling a good business at a fair price, even if their performance has generally been good. They deserve to be well compensated, but it makes little sense to give them an obscene payday for doing what any sensible manager could have done. We note that the shares have sold off on this announcement when they should have rallied strongly on the news of this deal closing. We believe this indicates the market agrees with our assessment. No one likes to add, quote, management overcompensation or poor governance as a line in their sum of the parts valuation. So, I mean, pretty strongly critical views from both of those companies, Nico. I don't know what you make of this. Do you think the Snaitech sale is something that any sensible manager could have done? Because that's what Peter Smith has suggested.
No. So, first of all, we are in the big numbers game, right? You can pretty much and easily scale up a startup which was valued 10 million to 30 million, right? Pretty simple, right? By just increasing sales, etc. But scaling up an established business which is worth 800 million to 2.4 billion, that's a big numbers game. This doesn't come easy. So you have to make a lot of pretty damn right decisions, first of all, within the competitive area of the gaming industry we are as of now, and then actually selling the part as well. So as of now, this just, the line of argument, like, okay, excessive management, salaries, etc., reminded me a little bit on the line of argument when it came down roughly 1.5 years ago, when Leila Mintas and PlayUp had been involved in a pretty much the same, not a scandal, but it was also a sale of a company where Leila has also been accused of gaining too much of the sale, etc. This has also been taken part. What had the on the theory of, but still did go through. So the PlayUp deal did not go through and was suffering. So first of all, high-end performance, like the management team of Playtech, Snaitech obviously did, has to be paid for as well. And if they tripled in the end the overall company value, it's just a fair share.
Okay, well, that's your take, Nico. I wonder if you would feel differently if you were a shareholder in Playtech, who, of course, have the ultimate responsibility to do what's best for their shareholders. So just to clarify, the two companies we've quoted, according to our sources, are relatively minor shareholders in Playtech. They don't have a huge percentage of the company. But there's kind of an interesting twist in the tail here, which is that as of Monday this week, approximately 35% of shareholders, or shareholders representing 35% of the shares, had indicated their support for the proposals. And I want to shout out an article that was in the Times. And the title of the article is called, the article's called Playtech Governance Woes, a Sure Bet. And it was a really nice little analysis from someone who clearly knows this business quite well, because this article suggested that the 35% of shareholders who are voting to approve the 100 million bonus could be the same group of Hong Kong-based investors who blocked, if you remember a couple of years ago, Nico, blocked an acquisition offer from Aristocrat, which was worth 680p a share at the time. So there was that kind of twists and tails story of Aristocrat making a bid, then More Wiser was going to kind of find his own group of investors and launch his own takeover bid. It all kind of fell apart. But curiously, that 35% of shareholders figure was quoted at the time. And so it was assumed that the reason they couldn't get the Aristocrat deal through is because this group of Hong Kong investors had built up a 35% shareholding in the business and they were able to block it. So it's a little curious that as of Monday, we've got 35% of shareholders also voting to approve 100 million euros in payments to senior management, of which the biggest share is going to go to CEO More Wiser. So That's definitely worth a little read, I must say. If you can find that article in the Times, do have a look. It's called Playtech Governance Woes, a Sure Bet. Anyway, just to round this one out, Nico, a Playtech spokesperson told us that it is not our policy to comment on conversations with individual shareholders. Playtech actively and continuously engages with its shareholders in private and strongly believes that is the most constructive way to engage. And finally, just to clarify, in order to be actioned and to actually take place, the bonus as well as management's ordinary remuneration will need to receive shareholder approval in a vote in November. So next month, we'll see which way the wind is blowing at Playtech and whether senior management are going to get their big payout, and who knows, maybe retire to the Bahamas and call it a day. But there you go, Nico. Anything else to say on this one? I mean, look, it's not a bad problem to have. There's always going to be haters out there, and if you're getting a 50 million euro bonus, well, you can hate away, but I'll be happy on my money. So there you go. What do you think?
Yeah, we've seen this. We've quoted this so many times. As soon as it becomes a stock exchange driven game, which is obviously then it's a different ball game. First of all, you have the green mailings, then you have these active investors who just trying to get some extra money. Usually they're compensated if they speak out with a chair at the board, which obviously doesn't work in this circumstances. I'm pretty sure they just want to gain some extra money. That's why they are actually coming up with these statements. Because in the end, just from what we can read, it just reads like a reasonable deal for all parties being involved.
Yeah, well, there you go. We'll keep an eye on this one. What's going to really matter is whether the shareholders approve it next month. So we'll keep an eye out and we will let you know. And that's about it for Playtech today. We've had about half an hour of Playtech discussion because at the moment they just can't seem to stay out of the news. But we're going to move on to the second half of our show in just a minute, bringing you all the latest from the UAE, which is set to be a very exciting land-based market in the near future. But first, we have a very brief video message to share from one of our partners.
Tens of thousands of games, hundreds of studios, dozens of hub market partners, an industry-leading hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are.
There you go, and thank you, as always, to Hub 88 and to Place and our partners here at Weekly News who keep us coming back every single week, Nico. Now, just as we promised just before our quick ad break, we are going to bring you the latest from the Middle East and the United Arab Emirates. Now, Nico, I know that you've been looking into this one, so why don't you bring us the latest?
Yeah, I've not just been looking into it. I used to live a little bit in Dubai as well. Being at the heartbeat of this overall discussions. And now we have some clarity as Wynn Al Marjan secures the first gaming license in the UAE. It's not actually the first gaming license, as they already distributed a lottery license in the UAE as well, but it's the first gaming license for a vertical which comes out of casino, sports betting, bingo. So lottery aside, which sometimes people don't consider as gaming, as it's whatever, skill game, I don't know. But now we have some clarity as Wynn Resorts has received the first commercial gaming facility operators license in the UAE from the General Commercial Gaming Regulatory Authority in the UAE. Wynn said it is proud to be recipients of the first commercial gaming facility license in the UAE, and we have an official statement. It is: we are underway with the constructions of our resort in Ras Al Khaimah and look forward to being a key partner in the development of its tourism economy, it said. Analysts, and we touched on this one already last week, analysts estimate that Wynn Al Marjan could generate approximately 1.8 billion in revenue and 500 million US dollars in EBITDA by its third year of operation, which potentially adds 10 to 20% to Wynn's stock value. And this performance would rival that of Wynn Las Vegas, which brought in $2.5 billion in revenue and 945 million in EBITDA last year. So quite interesting that roughly half, they would add 50% of even more EBITDA as well. So once again, shout out. They have been desperately waiting, just waiting for the license. So now license has been granted. A friend of mine came over just last week and he was overwhelmed by the construction area of this huge complex, but we will touch down on this one just a little bit later. So what do you make out of this first commercial gaming facility operators license in the UAE, Connor?
Well, I know that Wynn will be celebrating, let's say that for sure. And it does seem to me, you know, they've got that kind of first mover advantage. We have already discussed, is there a Caesars in Dubai? There's a Caesars resort, but no casino, something like that. So they do have integrated resort competition out there. But for actual gaming, it looks like they're going to be the first property to launch land-based commercial gaming on in the UAE. And as you mentioned before, there's also a boat casino docked in Dubai, isn't there, or something similar, Nika? You know much better than me that area. But it does seem that you know, Wynn's kind of going all out. I think the figures speak for themselves. They're expecting, as we said, 1.8 billion in revenue by the third year, which is comparable to the 2.5 billion generated by Wynn Las Vegas. So it's obviously a very significant property if everything goes to plan. We know these things sometimes take a bit longer than expected. Sometimes they cost a little more than expected. And in fact, Nico, speaking of which, I believe that Wynn has announced an increase in its budget and projected spending for the project just this week. So what have you got on that?
Yeah, first of all, it's the Queen Elizabeth II, which is docking just in the harbor of Dubai. And Caesars, they have been in Dubai for almost 10 years, but they shut down their premise 1 or 2 years ago as they did not get the license, a thing which obviously has been solved now. So, like said so many times, Hollywood loves a comeback, and I'm pretty sure we will see some gaming operators actually coming back to the holy grail of Dubai and the UAE as well. But touching down, picking up the bone which you just threw into my direction, once again, thank you. Wynn, they have increased their budget by from 3.9 billion to now 5.1 billion. So, which is an increase by 31%. Exactly. There you see it. Wynn increased UAE resort budget by 31% to 5.1 billion. Be aware that this budget also includes already paid costs or costs which has been resulted because back in Q1 2024, they released a statement that they bought additional 70 acres of land just to being able to actually develop even a bigger facility, etc. And this, the revised budget includes, first of all, the land, as said, fees and capitalized interest, with direct construction costs accounting for 4.55 billion. So of course also this resort has been hit by the increased interest rates, and this also results in additional costs. Wynn will fund much of the project through 2.4 billion of debt, which has already seen strong demand from both local and international investors. So usually they just sell these debts with an guaranteed interest, and by the end of the project, by the end of this sale of the fixed interest, they will just gain back the shares as well. So the company expects GGR from the property to range from 1 billion to 1.67 billion. And so this is the worst case scenario and the best case scenario, with a base projection, which is the pretty much realistic scenario of 1.33 billion US dollar. The resort is also expected to generate substantial non-gaming revenue, leveraging the growing demand for luxury experiences in the region as well, as we've seen in Las Vegas as well back in the 70s. You know, these overall complexes just don't hold gaming so gaming opportunities, but also entertainment, pretty awesome restaurants, music stars, giving concerts, etc. So it's an overall and complex operations which Wynn is running there. And the adjusted property EBITDA is forecasted to fall between 390 and 570 million. And as already stated just a couple of minutes ago, it will be having an expected EBITDA effect of 500 million. The company said its projections assume the UAE will eventually host 2 other competitive integrated resorts, with Wynn capturing 33% of the market share. So we will see how this one will turn out, because as of now, there are only licenses being given out to the state of Ras Al Khaimah. As soon as we see movements in Dubai, it will be even more interesting, as Dubai is one of the biggest airports we've seen globally. So why do they actually set up a resort like this in that specific area? They are targeting high-value customers. Wynn said its strategy for maximizing revenue hinges on attracting ultra-high net worth international customers of international VIPs, who are projected to account for 37% of the resort's GGR. And this is quite interesting, because usually, if you take a look at the overall distribution of revenues, you usually make 80% of your revenue with 20% of the customers. So already aiming for 33%, just being VIPs. This just indicates what kind of numbers and VIPs Wynn is expecting expecting to attract within or with their resort. It would be quite interesting to see numbers from Macau, but usually these numbers are kept even more safe and more secretly than the Coca-Cola recipe. But probably we'll just see some numbers at one point. So Wynn's global database of over 100,000 high-end clients supports this statement, and the company expects these patrons to spend 3 times more per day at Wynn Al Marjan Island than at its flagship Las Vegas property. So I'm pretty sure we will see crazy numbers resulting from UAE. And so just an estimate from my end, They will leave Las Vegas far behind, and fingers crossed for each and everybody being involved, we might see even Macau numbers who are just one of its kind. So Wynn anticipates that international tourism will contribute 29% of its GGR with the resort's location, which is 20 minutes from Ras Al Khaimah International Airport and 50 minutes from Dubai International Airport, positioning it to attract visitors from across the globe. And already just prior the opening of the Wynn resorts, Ras Al Khaimah has been a hideaway and a place where tourists from Dubai actually, or which tourists from Dubai actually visited, as it's a very nice beach area as well. So it's nothing new. They already established this as a tourism place as well. And domestic visitors are expected to account for 34% of Wynn Al Marjan Iceland's GGR, tapping into the UAE's sizable population of 9 million. And now it gets interesting, non-Emirati residents, because pretty simple, and this was one of the biggest burden when we set up the overall regulatory framework. As a Muslim, no gaming, and that's why they specifically aim for the 9 million non-Emirati residents in the UAE.
Nice. Thank you for the update, Nico. It's certainly something that Wynn is pretty bullish on. I mean, 5 billion in costs, funding that with kind of 50% new debt, $2.5 billion in new debt. It's going to be incredibly interesting to see just how this pans out, because I'm sure Wynn has done lots of research, but none of us, sadly, can see the future. So we don't actually know still exactly how this is going to pan out. I think if you think about the gambling hubs, the casino gambling hubs globally, you have, you have Las Vegas in the far west and Macau in the far east. And actually, strategically, you would think maybe UAE is right there in the middle of the map. And actually, it makes perfect sense to put another highly attractive, high luxury, high spending kind of resort in that area. So I think I can see the logic. We also know, of course, lots of high net worth individuals are traveling to the UAE all the time. I think I saw a statistic that was something like 6,700 millionaires are expected to move to the UAE in the next year or something like this. So it's attracting lots of people. I think tax-wise, it's very favorable to people who've got a lot of money. So it makes a lot of sense for them to go there. The question is, of course, will it work? Are these projections realistic? It's quite a surprising mix. It's quite an even split what they're projecting. So it's like about a third from super high net worth VVVIPs, about a third from international tourism, but what you might call mass market tourism, and then about a third from UAE locals. That's of course people who live there, as you say, not the Emiratis themselves. So that to me sounds like they're going to approach each of those market segments in a similar way. I guess they're going to kind of go all out for all of them. It would be interesting to see if the actual revenues match up with what they're saying, Nico. But it's always exciting to see people put so much confidence and put their money where their mouth is on a new project like this and say, we're absolutely going for it. As I said, they do have that kind of first mover advantage, and so it makes sense. What's going to be really interesting is to see if any other resorts, or that is to say, any other resort operators get licensed in any of the other Emirates. So there's a handful of places that a new resort could be built with gaming in theory. So who's going to get approved before this one is finished construction? I would sort of put I would imagine this is a pretty attractive looking market, maybe for someone like Sands, who are obviously no longer present in the US, but have a huge presence in Macau and Singapore. So, I mean, let's see. What do you think? Do you think? Let's get one thing clear. Probably Wynn's competitors are not going to let Wynn just go in there and take all the casino money from the UAE that's available. They're going to want a slice of the pie. Nico, what do you think? There's only so many operators can actually put this kind of investment up, so it's a very small list. But who do you see as the next potential licensee?
So first of all, you already pointed out, this is also a big numbers game. So besides the licensing costs being pretty reasonable, and I will just pick up this topic as well. The only actual big time cost you're facing is establishing the resort itself. So we are speaking about the regular suspects, the Caesars, the MGMs, the Las Vegas Sands of this world. But guess what? Besides the UAE, we also have a slight evolving market, which is New York as well. So in New York, we are speaking about licensing costs which are significantly, and then establishing and building up the resort as well doesn't come cheap as well. So these are actually the two emerging markets, the potential future markets for these casino developers. Macau pretty much taken, Las Vegas pretty much taken, Australia also pretty much taken. So we see the UAE and New York as the emerging markets. And one thing is for sure, these casino operators, they will just be able to invest into one market and one market only. Remember when Wynn finally decided on, going for the Ras Al Khaimah property, they wanted to sell their Wynn sports betting assets in the US. Out of a sudden, they were looking for a buyer of the $600 million assets. If I'm not mistaken, they didn't sell it, but actually they thought about selling the business. So this also indicates they will not invest into New York with another property. So with this decision to being on the table, we will just see who will follow the money into the UAE, or who will invest into New York and Rock Nation, the company being held by Jay-Z as well. They will heavily invest into New York as well. So these are the two upcoming markets. And one thing is for sure, you heard it here first. We will continue feeding the news. And as my friend Big Roch said, and he's quoting Unai Emery, "Good evening, lads. Great show as always. You're always welcome to get even more knowledge by just listening to us."
That's it. Thanks, Roger, for commenting, and good evening to you too. Nico, I should give one final shout out actually to Thailand as an emerging integrated resort casino market. That's also going to be an area for investment in the future. But if we think about costs and the potential earnings, certainly New York and UAE take the cake there. I think they're the biggest opportunities. So there you have it. That's the latest from Playtech, Games Global, UAE, Wynn, and the new Al Marjan Resort. And that is nearly a whole hour, Nico, because, when I'm with you, time just flies, baby. It's been such a lot of fun.
Oh, that's quite a nice compliment. I'm getting that a lot.
Right. Well, Nico, you know where to find us next week. It'll be right here in the same place at the same time. So all that remains to be said is thank you once again to Placent and Hub 88 for sponsoring this episode. And thank you to everyone for watching and for listening and for commenting. It's always nice to be kept company by our loyal viewers. One final hello to everybody out there at G2E in Vegas. If you're listening to us, it must be a very early start for you. Good luck with the rest of the conference and the show. I hope you're all having a good time. And like I say, we'll be back here, same place, same time next week. So Bye, everybody.
Bye.